Hello YouTube, this is Crazy Trader and I bring you your favorite stock review. What do I have here for you today? Today I'm just jumping right into the stock, okay? So it doesn't have to be a long video. So Annaly Capital, and this is part of my 5 rich stocks that I think every Gen Z and millennial should have in their portfolio. You can choose one, you can pick all the 5, whether you like it or, which ones you like. You can pick 2, anyone you like, then you can pick 5 of them. This is the last one that I'm talking about. I talked about MITT, NYMT, I talked about TWO, and then ORC, right? Yes. And this is going to be the last one, that is Annaly Capital. The ticker symbol is NLY, Annaly Capital. Let's jump right into this. As I was researching this during the week, I realized that I just found a gem of a stock, and everybody who is in this stock, I would encourage you to hold it for a long time. If you're not into it, and if you haven't gotten any restocks in your portfolio, my favorite restocks have always been IVR and MFA. But if you don't have any and you don't like IVR and MFA, the next one I want you to jump on is Annaly Capital. And I'll give you reasons why I think you should jump on this stock if you don't have any restocks in your portfolio. And you'll be amazed by it. The stock price is $8.53, which is pretty decent. It's below $10. Amazing for something that for a young investor, a millennial, Gen Z. Amazing for you if you have $100, you have $200, or if you want to do a recurring investment of, let's say, $10 every week. Okay, $10 every week. You can be buying this every week, one stock every week. Okay, 1 week it was down. No, it wasn't down. It was up less than 1%, and then the past week it's been down 1.6%. Don't look at all this because it's below and above 5%. I always call, okay, above 5% is a big jump, but below and above 5%, I think they are always trading sideways. So 15% in a year is a big jump, but you can't base their performance on this because we're coming down from a pandemic. Okay, so in the 5 years, let's see, before the pandemic hit, these guys were trading 11, 10, 9, 8. Right in the year 2019, they came from $8 all the way, and then they peaked in February to $10, and then the pandemic hit. We all know the pandemic hit in March, and then somewhere in April they were down to $4. Okay, so from $4 they started picking up slowly, and they doubled their price from $4 to $8 right after the pandemic. So let's go down and see what kind of company it is. It's a real estate investment trust, like I've always talked about. So this is just a real estate investment trust that invest in agency-backed mortgages. Okay, their dividend yield is 10.34%. I don't think Robinhood doesn't really provide the best dividend yield numbers. So I'll take you to Nasdaq.com, where they have most of their things updated. Their market cap is 12.2 billion. That's a huge company. 12.2 billion is a huge company. Okay, so I see the buy ratings. This is from 12 analysts. The buy rating is 58% and the hold ratings is 41%. You can see there's no sell ratings out here. People like this stock. I normally don't take the analyst's word for it, but at least it is giving you a view of how people see the stock, how some of the professionals see the stock. So let's jump real quick. This is an $8 stock. Let's jump. Let me take you real quick into Nasdaq.com, and let me tell you some of the things that I saw that I was very impressed about when it came to this stock. Okay, so the dividend yield is 3.39%, which is almost in the same range as Robinhood. The annual dividend is 88 cents per share. So that's, let's say, almost $1 per share. So just 12 cents short of $1 per share. How much are they paying every quarter per share? These guys are paying 22 cents every quarter per share for an $8 stock. That's amazing. That's really amazing. 22 cents for every share. And look at this. Look at something that you will be amazed with. Okay, right all through after the first quarter of 2029, the second, third, and fourth quarter of 2029, they paid 25 cents, and then the first quarter of 2020, which is the first quarter right before the pandemic hit, they maintained their 25 cents per share. Okay, And then right after the pandemic hit, these people didn't stop paying dividends like a lot of, real estate investment. They didn't even drop 90% because a lot of the real estate investment trusts or the REITs that were out there, their dividends dropped, some 60%, some 70%, some 80%, some 90%. Okay, watch this. First quarter, 25 cents per share. Second quarter in 2020. Are you watching? Second quarter in 2020. 22%. Third quarter, 22%, 22 cents, sorry. And then the fourth quarter, 22 cents. So even right in the pandemic, they just reduced their dividend by 3 cents. Amazing. Freaking impressive. Very impressed. I'm super impressed by how this this stock is performing, and the people managing this are managing it superbly. And I think this is a safe place to have your money in. And even it shows right through the pandemic, there was a heavy pandemic where stocks went down. Let me show you something. Let's go back to at the price of $10. Listen, at the price of $10, we were paying 25 cents per share. And then even when the price dropped all the way to $4, that is 60% drop, they were still paying 22 cents per share. The dividend didn't drop 60%. No. It's just the price of the stock that dropped 60%. This is a resilient stock. There's no way you can convince me that this is not a super stock. And you can put $1 million. You could have put $1 million in this stock back in 2019 and still be safe in the stock, still be safe holding the stock, because you'll be making 10% in yield. Jesus Christ. You will not get this anywhere. You don't get this anywhere. A safe stock with a yield percentage as high as 10%. Amazing. Okay, so let me go on. I'm amazed by it. One thing that I have to bring to your attention that I wasn't really caught up by is their institutional holding. And my point when it comes to institutional ownership. The institutional ownership, I always love the 50.1. Anything below 50, sometimes I find it really not to my satisfaction. Some people like it. I don't really like it. But what I want to point your mind to is when you look at the institutions that are holding it, the moment you see Vanguard and BlackRock, these are the top institutions, but both of these people control about $10 trillion worth of assets. Okay, so if you see these people, then you know that most of about 50% of your due diligence is done, because they've done it for you. If you see them holding a stock, then 50% of your due diligence is done because they've already done it for you. And in the last quarter, they still increased their portfolio, which is pretty impressive. You can see that in the last quarter, this is all 2021, just apart from this, which hasn't been updated, but all this are the second quarter of 2021, and every one of them, apart from that one, this one, increased their portfolio. Every single one of them. Goldman Sachs increased their portfolio by 6 million shares, which is 200% of the previous shares that they were holding. So it tells you something. So I believe the institutional ownership is going to go up the more these people purchase. And these people, what they are doing is they are buying the stocks at the blind side of the people chasing the meme stock. So before you realize, this $8 stock will be $20 in the next 2 years or 3 years, and you don't even own a part of it. So this is the time that you can do a recurring investment, that you can put $10 every week, $10 every 2 weeks, something reasonable that you can afford every 2 weeks to own things like this, because they also pay you dividends. This guy is going to give you 10% dividend every quarter. Okay, 10% dividend every year. Sorry. So you have to make a good use of it. Annaly Capital Management. I ran out of time. I don't want to talk too much, but this is also an article on Yahoo News, on the Yahoo Finance. So you can go there and read about it. And let me go to the last paragraph and tell you something about it. There is no such thing as a sure stock on Wall Street, but having paid out more than $20 billion in dividend income since its inception in 1997 and averaging a roughly 10% yield annually over 2 decades, Annaly Capital Management is the smartest ultra high yield stock investors can buy. I didn't make this up. This is coming from Motley Fool. Okay, I didn't make this up. So you can go and read all about it. They have some great information and great insight about them. Just go to Yahoo News, type in ANL. NLY, and then read the articles about them. Great articles, and you're gonna love the information that they provide. I can't give you all the information. I give you the basics of it so that you can also do your due diligence. Don't be lazy. If you want to invest your money into something, dig deep and look at it. I'm bringing this to your attention so it makes it easier for you. Okay, so not to waste too much of your time. Like I always say, scared money don't make no money, and you always gotta risk it to get the biscuit. I'm out of your hair. Stay blessed and peace.